If you're listening to this, there's a good chance you work within the real estate investing industry. There's another good chance that you would like to increase the sales of your products or services. Well, you're in the right place. United States Real Estate Investor is a platform you need to place your brand directly in front of your target audience. With our focused, growing audience of real estate investing beginners, enthusiasts, and seasoned professionals, you can continually reach our captivated viewers and listeners with ease. To learn more or to get started today, just visit UnitedStatesRealEstateinvestor.com/advertising. That's UnitedStatesRealEstateinvestor.com/advertising. Get ready to increase your brand awareness and your bottom line. Attract clients with content.
Universe. Media. Network. 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 Network.
Welcome to This Month in Real Estate Investing, where we help you separate the noise from the news. I'm your host, James Brown, and in this episode, we're going to be taking different news items and breaking them down, including downtown LA market shift as tenants buy buildings, AI shopping agents set to reshape retail, and Gary Keller warns MLS leaders. Don't forget, if you're watching live on YouTube, you could share your thoughts and questions during the show. Also, if you're an investor looking to connect with an investor-focused agent in your market, go to UnitedStatesRealEstateInvestor.com/agents. And actually, I don't think we have that page up yet, so just email me directly at james@jamesbrownrealestate.com. Let's start the show. All right. Our guests today are Dustin Hendrickson and Mitch Ginsburg. Why don't you guys briefly introduce yourselves by sharing your background and what types of investing you're focused on? We'll start with Dustin.
My name is Dustin Hendrickson. I am president, CEO of Mailbox Money. I've been developing real estate since 2003, so 23 years. I've got over $500 million in transactions within that time period. We have a current portfolio of modern workforce housing of about 175 million, and we have another 160 million in the pipeline that we're currently under development with. We're hoping to grow that pipeline to 1.2 billion over the next 3 years because there's such a demand for workforce housing and specifically desirable workforce housing. So I really like efficiency. And I really like helping people, providing them with something that they want to live in. Kind of like when you cook someone a meal and they're really appreciative of that meal, makes you feel really good. The same thing translates to an apartment. When I design an apartment that people love to live in and they're happy to be there, that makes me feel really good. So that's what I do.
Fantastic. This is going to be great. Mitch.
Yeah, hi, guys. So, yes, I'm Mitch Ginsburg. I'm the founder and CEO of ComLoan. We're a operating system for commercial real estate lending. What that means is we really have the technology and the database to match borrowers with the perfect lender. You know, commercial lending is very diverse, as you guys well know. There's so many different property types and so many different types of lenders, and it's almost like looking for a needle in a haystack to match your deal with the perfect lender, and that's what we do. We have the giant magnet that will find the needle in a haystack. So we've been at this for probably 10 years now. We have over 1,000 lenders on our platform. We've funded, several $1 billion worth in transactions, and really looking to create efficiencies in what is really an extremely fragmented market. So excited to be here and to chat and learn more from you guys as well.
Right on, right on. Yeah, that's the great thing about the show is we all learn from each other. We've all got different backgrounds and got different news items, and so we can all kind of break it down together. So yeah, thanks for being here with us today, guys. Let's dive into the news. So the first news items from the Patriot Ledger. Real estate agent pleads guilty to $11 million embezzlement. What he'll serve is the title. So I guess he was diverting over 11 million from escrow accounts. And from what I was reading, it sounds like he's a managing broker where they keep the funds in an escrow account. I don't know, are you guys familiar or deal with that on the commercial side?
Yeah, I do. I've also bought a lot of residential real estate too, because I used to do more single family houses. But I would say what you can do to prevent that happening to you is make sure that the escrow goes to a title company. There still can be fraud everywhere. People can steal stuff, but title companies usually are insured against all that. And if it's held in an escrow in a broker's account, there's more than likely not proper insurance coverage there, and it's easier to take those funds. So you got to do a lot of due diligence. There's way more scammers than there used to be, in my opinion. With the rise of AI, we get more scam messages than we do real messages these days. So you got to almost think everything's kind of a scam, and how do I protect myself? And get multiple opinions, talk to your lawyers, have lots of layers before you just deposit a check.
Yeah, I agree. I think just be cautious, and with AI now, you almost really don't even know who you're talking to, because you could be talking to a machine. The inflection in the voice, the latency is almost gone. It's so realistic. So I think yeah, it's just really be very cautious, and I agree that if money is going to be held, particularly if it's one of the big national title companies, there's less likelihood of there being fraud if money's sitting in an escrow account. The minute the actual broker's got access to the money, there's the potential for fraud. Now, probably 99% of brokers are honest and good, but you just got to be careful you don't get that 1% that's not.
Yeah, and I wonder, because I'm in residential in Colorado here, we use title companies. We're not using attorneys and dealing with escrow ourselves. So we just, rely on those legit title companies to handle the money and also the transfers. But even the title companies are getting dinged once in a while where somebody jumps in and they reroute the funds away from the title company. I think we have another article about that. We can talk more about it. But yeah, it's definitely AI has given the scammers tools to really take advantage. It's unfortunate. I know in this article, there were agents, home buyers, sellers, everybody was affected by this. So, and the guy was sentenced to 2 to 3 years in prison with 5 years probation and restrictions on fiduciary rules or roles. So, there are, what's the word? Consequences to not doing things properly, right? So.
Yeah, absolutely. And I think it applies to anything. If particularly in commercial, if you're working with a lender that requires upfront money, without any result, say, give us a deposit of 10,000, 20,000, run for the hills, because there's a high probability that's their revenue model, is to collect as many deposits as they can and then figure out reasons why not to give it back. I think any legitimate lender would earn their money based on results. on execution. You fund the loan, they earn, whether they're earning an origination fee or whatever the case might be. But I think once again, anybody that's requiring upfront money, it's probably not a great idea. Look for somebody else.
Yeah.
Yeah, I totally agree with Mitch. You should do results-based fees versus a bunch of upfront fees and ongoing fees before you get any reaction or results.
Yeah.
Yep. Yeah, the main thing in residential is that earnest money deposits, those rerouting those. But I mean, they're still getting people's full payments, hundreds of thousands of dollars too. So,
well, if it happens through a title company and through escrow, I mean, that's on the title company and on the escrow. So generally, they incur the losses, and obviously we deal with a lot of title companies on a ongoing basis, and they've instituted a lot of controls where they call to verify wiring instructions and that kind of stuff, and they just don't base it on an email with wiring instructions. So there's different layers now of confirmation that they're sending it to the right place. But yeah, it's crazy the amount of fraud.
Yeah. Yep. Like every month we have
yeah
something has come up. So, all right, let's go to the next article. Los Angeles Times. Downtown LA's cratering real estate market is changing. Rich renters are buying their buildings. So just to clarify, they're talking about commercial retail renters, not like renters of apartments or something like that. So,
yeah, I mean, I personally think yes, it's probably not a bad thing. Owner occupied is going to be far more stable. There's so I think it probably, if anything, it's going to stabilize the market a little bit by having a strong owner occupied tenant, which who are running their business out of that particular property. It just eliminates a lot of the tenant risk and tenants moving, and so I think particularly in the downtown areas on the office side, which were the worst hit, particularly through COVID, and are just starting to recover now. But I think owner occupied tenancy is just generally is a lot more stable. So I don't necessarily see it as a bad thing.
Yeah, I agree. It seems like, though, the retail, when they go out of business is when they move. They're not usually hopping around that much unless they shut down. So just because they buy doesn't mean they're necessarily not going to close down. But I do think it stabilizes the market and it pulls some units offline. So now you have less pool of office or of retail space to rent. But I think it all goes back to crime. And you have to get the crime under control. People don't feel as safe in the downtown markets as they used to be. So in my opinion, it's just government policy. If government policy wants to clean it up and remove all the crime, your spaces will be booming. So you can just look at even a Scottsdale versus a Phoenix. Well, Phoenix, there's more crime. Scottsdale feels a little safer. There's way less vacancy in Scottsdale on any of the retail stuff. And so I just look at that. I think it goes back more to government policy, and the governments have to actually address the real issues that are hurting the retail space in the first place, because people don't feel as safe as they used to downtown. So they stay around more in the suburbs and they shop in those areas more often.
Great points. Yeah, I'm in Denver, and our downtown area was a mess, and they've been putting a lot of effort into cleaning that up. No one wanted to go down there. So it's interesting to see it's happening in a lot of other areas, unfortunately.
Yeah, I think like anything, people want to work in a desirable environment, and they want safety is obviously number one, and then just a lot of good amenities, and generally when there's decline in an urban area, because of crime and homelessness, et cetera, the a lot of the supporting businesses move as well. So, you could have this massive office tower, but the deli downstairs closes down, and the dry cleaner, and the little bodega or grocery store, whatever it is. So a lot of these support facilities, and it becomes really undesirable to work there. So I agree 100%. I think the key is, on cities to ensure that that the city's a desirable place to be in. Unfortunately, a lot of our larger cities have experienced a lot of decline, and hopefully they start turning that around.
Yeah. I was looking in the article. It said owner users now make up nearly half of office deals right now. So,
Yeah, that's a high percentage.
yeah.
That's huge.
Yeah. I was thinking about that. Like, with residential, right? You can get a home with way less down if it's your primary home. You have to put a lot more money down if it's not your primary home, like your secondary home or an investment, right? So it's riskier. So I'm trying to relate that to this, where an owner occupant of a building where they operate their business, they're way less likely to bail, right? And that's why like lenders require more in residential, because if it's your second home or it's an investment, that's the first to go. If things get tight, you're going to stay in your primary.
Absolutely. And I think, that definitely applies to commercial. I think the other thing is, depending on the size of the loan, because it's got loan limits, but SBA opens up for owner user, which generally you get high LTVs, in the 80 percentile range, which normally you wouldn't get. So, and once again, it's to promote businesses, the ability to buy their own facilities and their own buildings, and but also the risk, once again, because that's where they're running their business, the risk is less than if it was purely an investment property. So it's it all comes down to the economics. If the price is low enough, and clearly in some of those areas the prices have dropped significantly enough that that it makes sense for them to buy the building instead of renting it. So it's once again, it all comes down to, does the deal make sense?
Yeah, plus they're locking in their price, and if they feel that it's at the bottom of the market, now you can lock in your price and your rent doesn't escalate when the market picks back up. So they also could be a savings measure. But we see Class A stuff, primarily Class A, the most desirable stuff doesn't usually have an issue staying full. Now you can get in an area that de-gentrifies, and then now it's not quite Class A anymore, but we found the nicest, newest space with the best amenities, large windows, the good office space. Or retail space usually doesn't have as much trouble renting.
Yeah. What are LTVs if it's not tenant occupied normally in commercial? This is a whole different.
Generally on office, it's going to run probably about 70, 75 max. Thereabouts. For a normal bank loan, or CMBS, which is the commercial mortgage-backed securities, might be a little bit lower. Life companies generally are lower, but their rates are normally a lot more attractive, but generally are more risk averse. So they want the lower risk deals, which generally are lower loan to value. But typically, 70, 75% loan to value would be normal on an office building.
Yeah, interesting. Cool. Hey, let's go to the next article from Morgan Stanley. A turning point for real estate. Recovery takes shape. This was kind of all over the board about, where's things heading, as usual. It kind of depends, right? Like what sector you're in, your market, that kind of thing.
Yeah, we're seeing our apartments, multifamily is more what I keep track of. So we're seeing almost the same model throughout the whole nation. Absorption peaked because of low interest rates. Construction costs started climbing. Interest rates skyrocketed. People stopped. They paused. Nothing penciled. Now, people that have certain multifamily projects are having to bring in large checks to refinance because their construction loans are coming up, or their 5-year term or their 3-year bridge note is coming due. And when you have to put all that money into a property just to keep it going, you're less likely to acquire another property or develop another property. So new starts are way down, acquisitions are way down. But rents are bottoming out and they're starting to climb. And it depends on what location you're in. If you absorbed all the apartment inventory, you're seeing rents start to climb faster. If there's still stuff coming on, they're just kind of stabilizing, maybe have less increases. But it seems like it's at a trough for multifamily. There's other things like or industrial that wasn't near as bad. And we don't see any slowdown there, but office seems to be going up a little bit. And I don't know. It seems like the market's starting to get a little better after 3 years of pretty tough sledding.
I agree. I think, I was looking at some mortgage banker association statistics, and we pretty much bottomed out in 2023. And this is on loan volume, which really gives an indicator of, the actual overall volume. And it was about 429 billion. They're forecasting for this year to be about 873 billion, which is not far off the record high. So things are definitely starting to come back. Industrial has really probably been one of the strongest sectors, through the recovery. Obviously, there's a lot of demand for data centers and distribution centers, just in the changing economy that we have. Retail, funny enough, has been really pretty strong as well over the last couple of years. I agree with us. The multifamily has had its issues, but it's starting to come back. And funny enough, office, which has sort of been the biggest lag, is also starting to come back. But like everything, it's very regional. So certain areas perform better than others. Certain markets perform better than others, just based on the demographics within that particular market. But I think all indicators are we're expecting a pretty good year this year in commercial, and the projections on next year will be even better. And I think what's fueling a lot of that is there's just been an enormous amount of foreign investment. I just know here in the Metro Phoenix area, the Taiwanese semiconductor company that has invested, it's probably about 140, 160 billion dollars into a chip manufacturing plant in North Phoenix. And besides their investment, what then happens is you have all the ancillary businesses to support that manufacturing facility. So I think that's another thing. There's literally been an enormous amount of foreign investment into the United States, which is once again just really fueling the commercial real estate market. So I think for the most part, people are pretty bullish about the future over the next few years.
Yeah, I've driven by that chip manufacturing plant there in North Phoenix. Holy smokes! Like, what is that?
Yeah, it's massive. It's huge. It's quite something. I was actually talking with one of the economic development people for the state. I was at a conference last week, and they said they started working on getting that plant over here in 2013. Took them 7 years, and then they made the announcements in 2020. And yeah, it's massive. I mean, it's just huge. But just really great for the area, because it's just a lot of ancillary development. The housing that has to support the staff, and then the retail and hotels, and just everything's going up around it. So it's pretty wild.
How did they find that much land in North Phoenix?
Yeah, there's a lot. I mean, there's a ton. It's up, really out towards the. It's just off the. I don't know how familiar you guys are with Phoenix. It's just off the freeway, the I-17, close to the Carefree Highway. So there's a ton of open land there, and I'm not sure if it was unincorporated at some stage and the city annexed it, but yeah, there's a lot of open land there. I mean, that's the thing with the Metro Phoenix area. There's there's no shortage of land.
Oh, so is it actually North Phoenix or is it north of Phoenix?
North Phoenix.
Yeah,
Oh, it is
so-
still
So
north.
it's just off the I-17 and the Carefree Highway area, going out towards Lake Pleasant. So it's there's a ton of land and ton of development. And it's another thing I didn't realize is obviously Phoenix is in a desert, so water's an issue. And with all this development and once again speaking with the people from the state, we're actually using less water now than we did in 1957 because agriculture uses a hell of a lot more water than if it's built up and it's urban. So a lot of the land that is now houses and buildings and hotels and stuff is used to be agricultural land. So Arizona and Phoenix Arizona is one of the few states that and Phoenix, when they do a project, there's got to be 100-year water plan for that project, otherwise it's not approved. So I think living in the desert, it's just people are very aware of making sure there's going to be water for the future.
Yeah, that reservoir up north of that chip plant's pretty cool. I went up there.
Yeah, Lake Pleasant. Yeah, it's
Right.
yeah, it's a great recreation area.
Yeah, I've camped in that. I forget what they call it. It's some kind of state land up there where it's just kind of, you can go camp wherever you want. That chip plant's just adjacent to there. So maybe they carved out a little bit of that for that plant.
Yeah.
Well, hey guys, let's take a break and hear from one of our partners.
If you are serious about real estate and tired of guessing, you need to know about Real Expert Talks. This is where real questions meet real experts. As a member, you get direct one-on-one access to experienced real estate professionals. No courses, no fluff. Just focused video calls where you ask your question, get the answer, and move forward fast. 5 minutes, 15, or a full deep dive. You choose. One conversation can save you months of mistakes. And if you're an expert, this platform was built for you. Real Expert Talks lets you monetize what you already know. Set your own rates, control your schedule, get paid to give advice, build your authority, and expand your reach without chasing clients or selling anything extra. No middlemen, no noise, just expertise, access, and action. If you want answers, sign up as a member. If you have answers, sign up as an expert. Go to Real Expert Talks and turn knowledge into momentum. RealExpertTalks.com.
All right, let's get back to the news. From Housing Wire, FBI, cybercrime losses topped $20.8 billion in 2025. Real estate fraud hit $275 million. It was actually a 26% increase year over year. Oof, really went up. Article talks about using AI, deep fakes, voice cloning, AI generated emails, all that stuff.
Yeah, you
those are some
really
good
have
numbers.
You really have to be aware that if you don't know who you're talking to, you got to do a lot of due diligence, and you almost have to assume that everyone is lying to you until you get to know them. Don't disregard them, but just think that, well, what they're offering me is a scam. I better do the due diligence to prepare for it being a scam versus just saying, oh, yeah, this guy's trustworthy. We're going to move forward. But yeah, you want to get multiple opinions and everything when you're working with someone new or entering a new area, especially if you're really unfamiliar with what you're doing. If you're trying to learn, you should get a lot of advice. And what we do now too is we just put all our contracts into chat real quick just to get a quick overview. And usually it's pretty spot on. And if there's a bunch of issues, then we send them to the lawyer. But a lot of times they can give you immediate red flags and say, hey, this guy seems like a scam because of these points. So then you want to look in even more. And then other times they say you need to dig in, get more information, or this looks really legit. Send it to your lawyer and see what they think.
Yeah, and I think as technology evolves, and particularly AI, which is almost exponential at this point, you just, it's from everything, from voice cloning to, I mean, it's a race. It's almost a race for the good guys to build the walls to keep the bad guys out. It's so, I think like anything, you just got to be aware and careful and check people out, go online, do your research, and just buyer beware. I think a lot of that old saying, if something sounds too good to be true, it probably isn't. So that should be the first telltale sign. But it's just becoming so much easier for people to scam because of the technology. It's just amazing and just very, very difficult to tell what's not real,
Yeah, the question is, have you been affected by fraud over the last few years? I'd say the last 1 year, I have switched my whole mindset to just think that everybody's lying to me now if I don't know them, and dig into it as if it's fraud. Because the majority of the people that approach me that I don't know with some, oh, we have this equity or this debt, and here's how you get it. We just need this fee, or they'll start the process and then they'll want to bill you before you get the funds. Anytime that happens where you have to pay for funding prior, there's usually something going on there.
Yeah, and the probably one of the most widespread ones, and this is I think what affects title companies, and that we fortunately weren't negatively affected by it. We caught it, but where an individual was meant to wire a substantial amount of money to us, and his email had been hacked, and they changed the bank account and the where he had to send the money, and unfortunately there was a telephone verification, and that's what caught it. But you really have to be very careful, and one thing, definitely don't click on any links that you don't know what it is, because there's so many of just want to verify your bank details, or they come up with some really smart reasons for you to want to click on this link. If you really don't know 100% that this is an entity you work with on an ongoing basis, or this is somebody well, just don't click on any links, because that's their way in. The minute you click on a link, they're into your system, which is just and then they pretty much can do what they want.
Yeah, there's this hack I actually got roped into. It didn't cost me much money, and because it wasn't very insidious, but someone I knew very well sent me an email, and I was doing a deal with them, and they sent me an email with a click open link on it, and it was just a little bit off. So I should have questioned it. I should have called them and asked them, do I have to actually open this file? They came into my system, and then they sent someone. Then they got all my contacts, and before I could even tell everybody that I got hacked, they sent an email to a person that I deal with and send things to open up all the time. And so they obviously thought it was me. So they opened it, and the thing just spreads like that.
And I think what you got to do is really look at the actual email address, because they'll have your name, but it'll be actually, it can't be your actual email address. So always look at the actual email address, and not just that it's coming from, Dustin. It's what is Dustin's email address, and make sure that it's actually his email address, because that's a telltale sign as well. Yeah. But it's there's just so much of it. It's crazy.
Yeah. In the article it said elder fraud rose up 7.75 billion. I mean, that they're even more susceptible, right? Because they're not as savvy and just
Yeah,
kind of trusting, and
they
they don't
haven't
know all
grown
these little details.
they haven't grown up in the technology world,
Yeah.
so that's puts them at a huge disadvantage. It's all very foreign to them, and they're very trusting, so it's like, oh my god, and particularly if they get an email saying that, hey, if you don't click on this, the IRS is going to come and take your house or so it's, they generally, it's threatening them with, some terrible things going to happen to them if they don't click on the link or don't send this or whatever the case might be. And yeah, it's terrible how many of these people fall for it, and in many cases they can't afford it either. It's devastating for them financially.
Yeah. I've got a friend right now. She lost about 75 grand. I'm not really sure exactly. It was through some kind of a trading app that she got through the App Store. And, I don't know if there's going to be some kind of class action lawsuit against the app and or Apple who let them into this, or if it's just an individual using that platform. But she's kind of trying to keep this person on the hook, and because she hadn't blocked him yet to see if she can rope him in. So I actually just while we were talking sent her this thing from the article. It said FBI's financial fraud kill chain helped freeze 679 million in attempted thefts. I don't know if they can recover, but I hadn't heard about that division. But anybody that's
there's a
looking-
church in Sioux Falls. Someone hacked the account of the person that was setting the concrete walls, sent an invoice to the treasurer. The treasurer is like, oh yeah, of course they're the ones doing the walls. Sent out the wire to pay for the walls, and the FBI did recover some of it, but they ended up, it was like a $1.2 million invoice, and they ended up still losing like $500,000.
Wow, that'll sink you. Crazy. Well, yeah, this isn't going to end, so buyer beware. Let's see. Let's go to the next article from JLL. Not familiar. JLL.com. How AI shopping agents will reshape real estate. And they're talking retail real estate.
So we're seeing some new trends now. When we lease our space, our apartments, we find that we must deliver to their feed. They are not going on Google searching for an apartment because so many people are delivering the apartment into their feed, whether that's TikTok or YouTube or Facebook or Instagram or Snapchat or whatever it is. You have to somehow get into their feed because they're searching less. And if 5 or 6 apartment complexes put their stuff in their feed, well, that's probably enough for them to go look at and choose one. So if you're relying on people searching for your product, it's not going to work anymore. My wife also said they do this live shopping now where it's sold more on social media, where you just go through your racks of clothes and you're like, oh, we got this, we got this, we got this. And then they're selling stuff live like what we're doing now, except for they're selling retail clothes. And I guess it works really good. It creates a lot of scarcity. So there's lots of new tricks where you have to get in the social feed to sell stuff.
Interesting.
Yeah, I think, retail has obviously reshaped, and, a lot of the big box stores have been repurposed and turned into pickleball courts, I guess. That's the big thing. But, it's surprising that, retail has very much survived. I think people still want, to some extent, that physical experience, sort of walking into a store and walking down the aisles and touching, the products. So, I mean, there's definitely been a reshaping of retail, and I think it'll continue. A lot of the smaller retail centers are a lot more dominated by service providers like, nail salons and hair salons and that kind of stuff, which obviously, you can't do online. but I think just based on what we've seen with the the online, the boom of online shopping, over the last several years, you almost, the fear was almost retail would go away, your physical retail stores, and that wasn't the case. Obviously, Amazon and the likes have definitely reshaped it with the convenience and the ease and the efficiencies. But I think to some extent it just repurposes and so I personally don't think retail is on its way out. It's just going to get reshaped now. AI and these AI shoppers are obviously just the next iteration of convenience for the consumer. But I definitely believe there'll always be a place where people want to go to a physical location. I think a lot of malls have shut down. The marginal ones, but your real successful and well managed and well maintained and generally upper end malls are still doing really, really well. But a lot of malls have shut down and been repurposed. So I think it's going to be a general shift, but I definitely don't think retail's dead. It's very much alive and well.
Yeah, I totally agree with Bitch. I think that brick and mortar shopping has turned into experience-based shopping. So that's why when you have a really good experience, when you have good natural light, really natural products inside, you have restaurants mixed in it, you have an experience, you're going shopping. You're not going shopping for value. You're going shopping for something to do. I feel like if you're just based solely on price, you're probably on your way out of brick and mortar, but it's all transitioning to experience based, and your packaging, kind of like Louis Vuitton, right? You're not going there to get a deal. You're going there because you're going to get the champagne and it smells nice and they treat you great and the packaging's amazing. You kind of it makes you feel good. And so that's what I think too. I don't think retail's dead at all because women especially, love shopping. So
you summed that up really well. That was awesome. Yeah. All right, let's go to our next article from DiCello Levitt. Not sure. DiCello Levitt files first antitrust class action against CoStar Group over commercial real estate data monopoly. They say that CoStar controls about 80% of the market, and their allegations include limiting brokers' ability to share their own data, enforcing long-term non-compete agreements, and using tactics like digital tracking and IP restrictions. A lot to dive into there.
That doesn't surprise me because almost everyone, if you want data, you got to have a CoStar subscription. If you don't have the CoStar subscription, you got to call your buddy up that has one to get data when you need it. Otherwise, you got to, contact a broker that has the data, and they'll provide it for you as long as you use their services. So that doesn't surprise me at all because they control for surely all the multifamily data. No one refers to anybody else. It's basically give me the CoStar report, and they don't even call it data anymore.
Yeah. I think clearly they 100% they dominate the market. I mean, they've obviously invested. I know they've been around for a long time, and I've watched their climb. And it's pretty smart because they saw a long time ago that data's king, and they invested a lot into gathering the data. With some of their practices with regards to keeping others out. I guess the antitrust lawsuit will see whether it's proper or not, but they by far dominate. The accuracy of the data. I know there's a lot of other platforms that have challenged them and sort of come up, but it's like anything. Once you've got the economies of scale, and you've got that machine working, and you almost get to a size that it's very difficult for others to catch up. And I think that's probably more the case with them, particularly with data gathering and dominance, because as Dustin rightly said, everybody's just so used to using CoStar and the depth of their data and the accuracy of their data, and as a result, it's difficult for somebody to peel off who really isn't quite at their level and doesn't necessarily have the depth of the data that they have. It's like, why do I want to go with the other guy if I can still stay with these guys and get everything I need? So it's almost, it's like anything. You look at Amazon, there's nothing to stop somebody else building this amazing online shopping platform, but how do you compete? They got such economies of scale and that it's almost impossible to do what they're doing just because they were first and they built and they got to the size that they got to. So yeah, it's going to be interesting to see how it shakes out. I mean, maybe some of their practices could ultimately be deemed to be violations of antitrust. The mere fact that they've built up all this data, kudos to them. I think it was pretty smart.
Yeah, you can't blame them, right?
Exactly.
Yeah, going back to what Mitch said, I heard that Target and Walmart are like 10 years behind Amazon in the building of their technology, so they'll literally never catch up.
No, it's a focus. It's a business focus. If a business is focused in a particular area, and we've experienced it, because I think to some extent we're in a similar position to CoStar just for lending data. We're the only platform out there that actually manages the data of the lenders. We onboard the lender, we understand what their lending requirements are, and then we actually physically manage the data. So we got 10 years worth of lending data, which nobody else has. And that's given us an enormous edge because, you could have the best AI in the world and the best matching technology in the world, but what are you matching it to? And it's the data. It's the data really that counts. So, it's just, and particularly now with AI that has the ability of analyzing data so efficiently and doing it at a level and at a speed and accuracy that no human can. Data is becoming more and more and more valuable, particularly proprietary data. I mean, anybody could have access to whatever's publicly out there, but if something's not publicly available and it's within a particular company's own database that nobody else has access to, that's an enormous edge. And so, yeah, once again, I think kudos to CoStar, and we'll just see if some of their practices meet the smell test, and time will tell now that there's a lawsuit out there.
So there's a question. Do you think CoStar has too much of a stronghold on the real estate industry and real estate industry data? I don't think so. I would not want to create a business to compete with CoStar because they're so entrenched. What they do have is an extremely good reputation. So even if you disagree with the CoStar data, you still have to submit CoStar data to certain entities. They want their data. So even if you want to try and produce data from somewhere else, they still request CoStar's data. So they have such a good reputation that they almost don't even have to do these things that they used to do to get to where they are. So even if they strip back some of those policies or procedures and don't allow them to do them, they're still going to have the best reputation. People are still going to request their data. I personally, when I get entrenched in a market and I know that market really well, I think CoStar's data is like 6 months behind at least. I don't know if that's changing with AI and if they can update their models better, but we usually get calls. And so when they call, half of the leases are 6 months old or more, and the other half are new. So you've got, 1 month to 12-month leases, and they're collecting the data on all that. So it's always backward looking data, and in my opinion, but that's just how data is. Once you know the market, you can be 6 months to a year in front of the data. But someone still says, well, how do you know that? You still need to use their data to prove it. You can't say, well, because I'm in the market and I just know the market. You still have to produce something for them. So you go back to giving them the CoStar data, even if you disagree with it.
Interesting. This is relating back to residential and MLSs. with their data listings. I'm in Denver. RE Colorado is our MLS here. It's the biggest MLS in Colorado. You'd think maybe there would just be one MLS in Colorado. Nope. There's 11 different ones. It's just super fragmented. And so if you want to list a property in another area outside Denver, you got to go sign up for that one. And it's, $600, $1,000 a year, whatever, for each separate one. So as a consumer, as a real estate agent, I'd love to see one, but of course then you have this kind of, they're monopolizing, right? But we want it, even though they could take over maybe and have one and charge us way more, but who knows? Like it's a double-edged sword, right? So
yeah, it's efficiencies. I think clearly the world that we live in now it's got to be quicker, faster, quicker, easier, more accurate, and that's what people are demanding. And I think those companies that can provide it, it's key. Whoever's within a particular ecosystem, and that's what we figured out in commercial lending. There's really three parties in any commercial real estate transaction. You've obviously got the borrower. You then have the mortgage broker in many cases who dominate, and then you have the lender. And if you can provide a value to all three of those parties by creating a more efficient process, it's a win-win. Nobody's getting hurt. The lenders love it because they're getting loans that match exactly what they're looking for. The borrowers love it because all of a sudden they're getting choice and institutional grade access, which normally would only be available to the BlackRocks of this world. And the mortgage brokers are just getting deals done in a fraction of the time that it would have normally taken them. So I think technology definitely is changing the game. And I think no matter what the industry is, particularly with AI, I think we all just got to be very, very aware of this wave that's coming. And either you're going to ride the wave or you're going to get washed away by it. But it's definitely going to be enormously transformative.
Yeah. Well, hey, let's take a break and hear from our next partner, and we'll come back.
Are you looking to elevate your business through exceptional content? Universe Media Publishing is your gateway to success. We understand that in the world of business, content is king, but not just any content. Your business deserves content that captivates, convinces, and converts your audience into clients. At Universe Media Publishing, we specialize in crafting SEO-rich web content, persuasive copywriting, and marketing copy that resonates with your audience. We don't just write, we engage, we connect, and we deliver results. Imagine your brand's voice amplified, your message crystal clear, and your presence dominating the digital landscape. That's the power of partnering with Universe Media Publishing. Don't let your business just blend in. Stand out, be heard, and make an impact. Connect with us at Universe Media Publishing, and let's turn your vision into reality. Visit universemediapublishing.com today. Your story, our expertise. Together, we'll create magic.
All right, back to the news from BeaumontEnterprise.com. Midland police arrest man in alleged real estate fraud scheme. He's a 50-year-old guy. He was marketing investment properties online, and he didn't own them. And I guess victims were paying cash for some of these deeds. And meetings were taking place at local businesses instead of title companies. Kind of back to what we were talking about before. So
yeah, it's like anything, you just got to be aware. For starters, you want to meet at a legitimate title company. You want the title company involved. You want a proper title search done with the appropriate title insurance. If something once again just sounds too good to be true, it probably isn't true. And this clearly just from the little bit that I could get out of the article as well, it just everything about it just screams scam. But unfortunately, if you're relatively new into investing and you're promised all these phenomenal returns, unfortunately, people fall for it.
Yeah, this to me goes back to the value add market, which in multifamily is almost dead compared to where it was in 2015. And one of the reasons is because almost everyone with a click of the button has access to know what the value of their property is. If you're smart enough to own property, you're usually smart enough to get full value for it. So the days of getting a super good deal on anything are pretty much gone. You can still do it once in a while if you build relationships and you get a really deep connection with someone. Possibly you can do that. But if you're meeting in a coffee shop and some guy wants to collect your money cash on the spot, you're probably getting scammed. And it goes back to what Mitch says. If it's too good to be true, it probably is. So you better really, really look into it. And then the other fact is, if you're getting a really good deal, you're probably almost taking advantage of someone else. So you can go and build a relationship with an elderly person, and then you can say, hey, I'll buy your property for X, even though you know it's really worth Y. Is that even really worth it to do business that way? That's what I always come down to. And so it's very hard to get a really, really good deal. So you might think it's a good deal, but it's only that deal because it needs so much work. It needs so much time. There just aren't that many great deals like there used to be. We used to get actual good deals when I first started. You could get a deal, and those deals pretty much are non-existent because all you got to do is type in a couple things on the internet and you can see exactly what your property is worth. And there's so many comparables. And so why would someone sell you something for way less than it's really worth unless they're super desperate? And that usually comes with a lot of problems as well. So distressed real estate, if you look at the numbers and you look at it and you look at the work that goes into it, it's not like it's a deal. It takes a lot of work to get the value there. So I would just always be leery when someone wants money. Before you give them any money, you got to do massive amounts of due diligence.
You nailed it there, like about the deals. Yeah. You got to know your numbers.
Do you see any deals anymore? How often do you see an actual deal where you pull up, you're like, wow, what a deal?
Yeah. You don't. You can get a good price on something, but like you said, like it might need a lot of work, like foundation issues or something. And that's where having some expertise, knowing how to deal with some of those things and analyzing them to see, okay, is this foundation problem going to cost me 70 grand? Well, that might still be a good deal if the numbers pencil and you know it's going to be 70 grand, not 120 or whatever, right? Yeah. So there's deals, I guess, if you're willing to take the risk and you know that it's what you're getting into and have the capacity, right? Like seems like most of the flippers I know, they're going for those ones that no one else will touch. Everybody else, talking residential, they want a lipstick one. Everybody does. Tons of buyers out there looking for one where you just change carpet and paint, right? But when you're willing and able and confident to take on a big project, there could be a deal, quote unquote, there. But yeah.
And I think if you're new in the industry, is generally try to hook up with a mentor, somebody who's been around, that you're not going to learn the hard way by making lots of mistakes. Rather try to avoid them and have somebody guide you and show, help navigate some of those pitfalls.
Yep.
Yeah, like what you just said, Mitch. I think that all the industries have gotten so efficiency. Have got so efficient. We've been talking about efficiency. The markets have gotten so efficient. You can barely even afford to learn by making mistakes anymore.
Exactly.
Yep. Mentor. Get one. Yeah. That's why we developed the Real Expert Talks, which was our last ad spot there.
Nice.
Find somebody. That's a good way to test drive a mentor is through Real Expert Talks. See if they're providing the value, the real expertise you want, and then hey, maybe they've got a mentorship program. You want to dive in deeper. So I've spent a lot of money on mentors, and they've saved me a lot of money for not making big mistakes,
Exactly.
So,
exactly.
yeah.
So there's a few more questions here on specifically to do with real estate fraud. When purchasing real estate outside of traditional title company processes, I don't ever recommend that. I don't even know why you would, but
Yeah.
how can buyers verify property ownership and legitimacy before completing a transaction? What role should local governments play in preventing forged deed and property fraud schemes? How might incidents like this impact trust in off-market or private real estate deals? And then what safeguards can be implemented to protect inexperienced investors from these issues? That's a lot there, but I mean, this is why you have to have lawyers and professionals involved. I don't think I've ever transacted without using the title company. I don't know. It's really not worth it. And if we have, we've had a lawyer dig into it and we still purchase some sort of policy. So
Yeah.
If you don't know the person, if you don't have a really good relationship with them, like if you're buying something from your father, you could probably go to a lawyer and have them draw it up. But almost always it should go through a title company.
Yeah, and you have the title company do the title search, and you get title insurance, and then they're on the line if there was a cloud on the title and or if just something wasn't accurate. So so it protects you that in fact you're buying the property from the legitimate seller, which is key.
Yeah, and it says what role should local governments play in preventing fraud? Well, they already do play a role. They're going to prosecute, but that doesn't matter because the crime's already happened. You can never rely on the government to completely protect you. You have to protect yourself. And if you get ripped off, it really doesn't matter to you if that, who cares if the guy goes to jail? I still got ripped off. It doesn't improve my situation just because the guy went to jail. It might make me feel better. He might not rip someone else off in the future, but you just have to protect yourself. You can't rely on someone else to do it.
Yep. Well, let's go to our next article from Real Estate News. Gary Keller's blunt message for MLS leaders. He says that talks about warning that a growing reliance on private listings threatens the integrity of the MLS by reducing competition and limiting transparency for sellers. So this has come up quite recently because I won't name names, but there's some big players in the residential world where what they're doing is instead of listing a property on the MLS so everybody sees it, they're trying to keep it in their own platforms, and it's only helping them, right? Because, and the reason they do that is they're trying to get their realtors the listing to sell and the buyer together, and they get both sides of the commission. And that's helping them, but that's not helping promote that property to as many eyes as possible and getting the price high as it can go. So that's what he's warning against that. So it's not in the best interest of sellers. So.
Yeah, and once again, I think it's it's incumbent on the seller to try and understand, how's this going to benefit me, by just listing it onto your particular agency or company's platform. And clearly they're saying, well, it's exclusive and we are going to get you the best price. So I think, the market should correct it at this point. I mean, if they're doing really well and they're growing and people are happy, then I guess they're doing something right. Maybe there's some validity to it, but generally people vote with their their pocketbooks, and you know, you're not going to really get amazing traction unless it does benefit the sellers. The seller's going to say, well, I think I'm going to get a better price if I was on an MLS opposed to being within your closed system. So I think time will tell. Time will tell if how well they do, and if they do really well, then clearly something's working, I guess.
I think the problem with it is they can say, hey, they might have a lot of eyes on a property, right? But they don't have all of the eyes, and they may get that seller a good price. But the problem is, if they haven't listed on the MLS, those sellers don't know that they couldn't have gotten more money, right?
Yeah.
They might have got a good number, but not the best number. You just don't know that. There's no way to go back and and compare side by side, split test it, right? They just have to trust that.
Yeah, there's another question here. How do you think increased use of private listing impact pricing transparency and competition in local housing markets? I don't know. I'd think that with all the recent rulings, I think the MLS is becoming less valuable. And then you put the house, if you list it yourself, you're really good at marketing, you can have just as many eyeballs on it as if it's on the MLS. So if you really are really good, you can contact all the brokers and let everyone know. When we sell stuff in the multifamily industry, there's no MLS, and everybody knows about the transaction and the sale. So I'm not sure. I think it flushes out some of the smaller guys, and you have to be better at marketing to survive. And are they trying to get rid of the MLS? I don't know, but it feels like the MLS is a little antiquated, and it's probably going by the wayside. Maybe not. Maybe that's just another fee that realtors won't have to carry. Who knows?
I think consolidating, like we were talking before, instead of like in Colorado having 11 different MLSs, have one. But we've talked a lot about a national MLS as well, which I think makes a lot more sense. But I don't know how. Like, we have a lot of for sale by owners that I think over 80% end up listing with a realtor because they do have full access to the MLS and where those syndicate out to. Because like a for sale by owner might go listed on Zillow. That's the main one. And Zillow gets a lot of eyes, right? They're the biggest search engine for real estate, but they're missing every other ones because there's like homes.com and realtor.com and many others that it gets syndicated out to. So
yeah, I think the FSBO, though, they don't know how to market. They think that it's easy. They're not really realtors. So I think a realtor that doesn't necessarily use the MLS can still be massively powerful. So if you say, I got to use 11 MLSs, or I can do my own marketing that might be better than MLS, I'm still offering the fee to the other broker, and brokers will work with me. A lot of time, FSBOs, realtors don't want to deal with them because they know that there's a reason why. So their mindset's different, and they might be hard to work with as well. So they're generally avoided. And then they realize, oh, selling a house actually isn't that easy. So I'm going to bring in a realtor.
Yeah. I personal experience dealing with a FSBO seller. Oh my God. Eventually she got an agent who was a saint. Just love her. She just helped keep it together because that seller wasn't. We were going to get nowhere, you know. And the other thing is the negotiation. Like that's probably the biggest thing. You get in a negotiation and you're up against, as a FSBO, a professional that's trained. Like not every realtor has gone through negotiation training. I've gone through it. They're at a huge disadvantage. And then there's also liability. You've got your realtor that has, insurance and knows all the documentation that needs to be used. There's a lot more people that just don't realize. So anyway, we could go down a rabbit hole there.
So that fee, when they said you can't charge the fee anymore, it has to be disclosed. that in our area, that didn't change anything, because as soon as they said we're not paying that fee, then the buyer agent quit taking them to the homes, and they wouldn't show any homes.
Right. Well, yeah, we can't say on the listing side how much we're offering or not offering. So now it's just like commercial real estate. You just put whatever that buyer agent fee is agreed with the buyer in the offer. And if the seller is willing to pay it, they'll pay it. Otherwise, the buyer has to come out of pocket. So yeah, I think they even saw that the commissions overall had gone up a little bit since this. It totally backfired. So
yeah, that's awesome.
Yeah, it's crazy. So it just kind of goes back to like, hey, there's a reason there are real estate agents. There's a reason they charge and get paid a certain amount, because it's worth it, right? So anyway,
it's like selling a used car. It's way harder than it should be. Your used car is worth nothing when you're trying to sell it, and when you go to try to buy one, they're worth a fortune.
Exactly.
Yeah, right. Yeah, well, let's go to our next article from Fox Business. CEO, Miami's luxury boom fuels mecca for wealthy as other buyers feel priced out. Talking about wealthy buyers relocating from high tax states to Miami. They mentioned the Design District, which is like a mixed use luxury area with units starting at 1.8 million. So it's kind of talking about how that's affecting middle income buyers that are having affordability issues. Yeah, I don't know. You guys familiar with the Florida market or luxury?
A little bit. Miami is just highly desirable. And so across the bay, so Key Biscayne is super nice. It's a little more quiet. You go across the bay back to the mainland, and that is, I forget what that's called. That's like the most popular part of Miami, but the Design District is just north of it. And the Design District is rapidly gentrifying. So that's what's happening, is it's just pushing everyone out. But you'll have a complete dump next to a brand new massive high rise in this area, or not maybe a high rise, a mid rise. And all the restaurants are going there. They've got graffiti everywhere. So it's bringing this culture in. But this was destined to happen. Miami is an international city. Its weather is phenomenal. And as soon as you don't need to be in a certain location to do business, it's going to boom. So I don't really care when an area gets really nice. I guess if you like it just happens. It's that's how life works. If you get priced out, you get priced out. There's really nothing you can do there. And you try to suppress the market. It never works. You can add some affordable units here or there, but even if you have affordable units, everything around you is super expensive. So now they don't have groceries you can afford. They don't have restaurants you can afford. It's really busy. You got to move. You got to find a different neighborhood that suits you a little better. So I guess I'm just not much of a bleeding heart when it comes to trying to figure that out, because I think it's impossible to figure out. And this is why we build a product, and we only can build our product in the suburbs. We can't put our product, which is affordable, in urban areas. It does not work. And so we have to outside the urban core, but still close enough where we have access to it.
Yeah. It's supply and demand, right?
Yeah, absolutely.
Go for it, Mitch.
Yeah, I agree. I think the minute you start dabbling with the market forces, and reality, the more when government gets involved and tries to fix prices and stuff, it really doesn't do any good. I mean, it takes away the incentive for real estate investors to make money, and as a result, areas start going down. So I think let the free market work, and if an area becomes desirable and really gets regentrified and prices go up and new new buildings go up and becomes really desirable, and certain people are priced out. I guess that's just the way it is. And I agree with Dustin that you just find an area that better suits your economics and that works for you. But I think once again, the minute government gets involved and tries to interfere, it really doesn't work. I mean, it's just unfortunately that government's not really good at doing anything efficiently, and just let market work, market forces work. Capitalism, unfortunately, is unforgiving in many ways, but it works. The minute you take away the incentive for people to better themselves and make more money and do well, it sort of just brings everybody down. And I think so you got to take the good with the bad, but I think the good sort of certainly outweighs the bad. And real estate investing is just a great wealth creator, and you got to have free markets to be able to do that, and to be able to. There's obviously a lot of risk and people that get involved in real estate, obviously, but there's enormous economic benefits, and you don't want to mess with that. And it happens at every level, at the lower level, or in single family homes, or smaller multifamilies or other properties, and then obviously it applies to these massive high-end, very expensive products that if somebody's putting their money into it, they're going to want to make a return on it. So I think let the markets do what the markets do.
Yep.
Yeah, it says how sustainable. Another question: how sustainable is Miami's growth if rising costs continue to push out non-luxury buyers? Well, I'd say it's very sustainable. You can push out non-luxury buyers to 15 minutes out, and it's still highly sustainable. These are very small pockets of luxury areas, so they'll gentrify an area with luxury, and it's extremely sustainable because there's so much tax revenue coming in. There's so much money that's in that area. There are also a lot of maintenance to be done. They're very well maintained. You go to some luxury areas, there's more workers there than actually people that own the houses. And so the economy adjusts for it. There might not be as many shops if there's less people, but I just think that the overall economy, that having luxury homes is actually boosts the economy, because there's just so much capital that comes in.
And I think people are moving to Miami because they've created a very business friendly environment.
Yeah.
So I think people move from states where there's higher taxes, there's more government regulation, there's less freedom. And, so once again, people are going to move to an area where, they feel there's more opportunity, and generally that comes from, a more business friendly environment, which clearly, Florida's created. And as a result, they're experiencing the boom that they're experiencing.
Yeah. And people in my generation, or even younger, more younger than me, millennials, they love Miami. And there's massive opportunities. People say, oh, Miami's so expensive. Well, it's expensive because there's so much money to be made there. And the market is phenomenal. The capital, if you want to raise equity or capital, Miami is the place to go in the wintertime. Almost everyone goes down there. So there's very, very good jobs and a lot of capital to be placed or sourced. So they're doing a lot of events. There's just a lot of stuff happening. I actually don't like Miami at all. I feel like it's the Vegas of the South, kind of, or the Southeast. When I go to Miami, I can't wait to get out, because I like Naples, which is on the other side of Florida. And I love Naples. It's a little more quaint, a little more old school, low-rise buildings. There's nothing over 3 stories there. And so I would rather be in Naples. But when I see Miami, I think it's wildly sustainable. And the growth that I've seen from Miami in the last decade is crazy to me, how fast it's grown. So I think it's extremely sustainable what they're doing there.
Interesting. Cool. Well, hey, let's jump into our final and fun news item from Scientific American. a robot ran a half marathon faster than a human. Here's why folding laundry is still harder. I guess they had multiple robots running this half marathon, and it was pointing out that most of them were either remotely controlled, and even the autonomous ones were following like these predefined routes, and so they weren't really adapting like you'd expect if they were being run by AI. So they're struggling with things like that kind of relates to talking about navigating crowds and folding laundry, some of those more complex skills. So
let's give it 2 years, guys. Let's even give it a year. It's just evolving so quickly. We're on the baby slopes, I mean, of where this is going. I have no doubt that next year the robot's going to run that much better, that much faster, that much more autonomous. It's just, I mean, Tesla's invested so much now into the robotic side of things, and rightly so. It's evolving exponentially. So the robot that ran today, in a year's time, is almost going to seem like an ancient relic in comparison to the capabilities of the robot that's going to run in a year's time. So it's very much baby slopes, and you're going to be amazed how fast this is all evolving. It's insane. I mean, even look at autonomous cars. I mean, I don't know where you guys live, but certainly in the Metro Phoenix area, we've had Waymos now for several years because they tested it here. They actually, the first city they tested it in the country was Tempe, Arizona. So we've had them here for a long time, and it's still mind-boggling. And then now they drive all over. I mean, it's literally the entire metro area. You just have all these autonomous cars driving around, and they're just getting better and better. And soon they're going to be on the freeways. Up till now, they're not on the freeways, but I can see the guys driving in the autonomous cars, mapping the freeways. So it's the genie's out the bottle. It's not going away, and it's just going to become more and more and more capable. And they'll be folding your washing very soon. Trust me. Don't have to worry about that.
Yeah, that makes sense. They tested the Waymos in Phoenix because I feel like the worst accidents I ever see are in Phoenix. And when I drive around, you see when people get into accidents in Phoenix, both cars are completely totaled.
It looks around, yeah.
Absolute disaster. I can't believe how crazy the accidents are there. But that is kind of funny that's the testing ground for the Waymos.
Yeah, well, I guess also the streets, the way the streets are laid out, it's very much a grid. Yeah. So I think it was probably easier for them to map it and learn it, and not a lot of winding roads and hills and that kind of stuff. It's pretty much a flat grid. So I think that sort of lent itself to starting it off and learning it. But it's just going so fast. And technology, I think the exciting part, we're probably living through an era of the greatest technological advancement in mankind. If you analyze, from the advent of the silicon chip, which really then was the driving force besides the cellular phone and the personal computer and everything and then the internet and everything that followed from that. But what's happened in literally a space of maybe 40 years has had probably a far greater impact on mankind than anything before. And you took from the back in the days when we were all wandering around with spears and stuff for several 100,000 years, and then you took the agricultural age, which was maybe about 25,000 years, and then the industrial age, which was about 250 years, and now you just see how time's compressing, and we're probably living through the greatest changes in human behavior and as a result of technology. So it's exciting, but it's pretty frightening. There's a lot's going to happen over the next several years.
Yeah, it's funny that you mentioned time compressing, because I feel like I witness that every year. It feels like time moves faster. And I didn't know if maybe I'm just older, and so a year is just a little bit less of my overall age. But I do think that time moves faster as time marches on. And you also, with the advent of technology, so much more gets done, and you don't have to work near as hard. We feel like we're working harder because we're probably connected, so the mental fatigue might be more, but the amount of work you actually have to do to get stuff done and how fast things can get done and how efficient everything is, it's pretty mind-boggling. But yeah, that article, when I read it, when I was reading all these news snippets, I was like, well, that's kind of like I could ride my electric bike faster than these robots, or even a mechanical bike. I could just, I can use a machine, because they're controlling the robots and they're telling them where to go. But I agree with Mitch. It won't be long and they'll be able to do everything. And this is why I say, you better have relationships, because relationship is the only thing that I see AI not being able to take over. When we try to insert AI into relationship creation, it fails miserably, and it fails worse and worse as AI gets better. So before, we would actually be able to build relationships a little bit when AI first came out, but now everyone understands it's AI and they want nothing to do with it. So you must build relationships in your business to make sure that you add value in the future.
Yeah, I think it's using technology as a tool, and that's something we recognize as a company, is that we consider the mortgage broker as our last mile, because people really want that person that they can consult with, that trusted advisor that they can sit down and help advise them. But then put tools in that individual's hand, into the mortgage broker's hand, that is going to make that mortgage broker infinitely more efficient using technology with AI and matching and packaging and, etc. So really turbocharging their abilities and their experience, but yet still having that personal touch with an individual, which I think is key, which I agree with you, Dustin. I don't think people are ready, particularly on larger transactions and, for a fully autonomous process almost, where there's no human interaction. I think people still want, particularly, you're buying a substantial piece of real estate and it's a substantial investment and there's a lot of moving parts, just to have that trusted advisor that you can sit and chat and brainstorm and get that comfort level. But that person has to have the best tools in their hands to ensure you're going to get a great experience. I think that's really the key.
Well said. Yeah. So how do you guys see robots, kind of going back to this article, being used in real estate? I've got a couple of thoughts, but anything off the top of your heads?
Well, I think we're already using them a ton.
Robots?
I feel like they improve your communication. You also have to de-robot it, but so that you got the AI models and then the agents and the bots, and then robots will be next. Robots will control the bots, which will control the agents and so forth. But we're already seeing where if you really know what you're doing, you can program a bot to do what you do. The problem is that I don't know how to program, so I don't know how to program a bot to do what I do. And when I bring an engineer in to program a bot to do what I do, he doesn't know what I do, so he can't program the bot to do it. So the problem that we're running into now is that you have to be super well versed in your industry to create these bots that actually work. So that's why you're seeing bots work really, really well in the programming side, because those guys know how to run the bots. Where you're not seeing it work as good is other industries where they're not as good at programming. So you have to learn the entire process yourself and have a deep knowledge base so you can program the thing to work better. So I always feel like AI takes these huge leaps forward, then you start implementing it, and then you realize, oh, it's still not ready at all, and we still have to use a ton of human intervention to direct the robot. So I feel like the robots are going to help you get a lot done, but to me, it still seems really far off when you can just unleash the bots to do all the work. They still need so much direction. Like, we're still nowhere near the point of, hey, I'll let the bot control any financial decisions, because if it says yes to something that's wrong, the money's gone. It's like wiring your money to the wrong account. So we don't allow it to do any type of financial decisions, no matter how minuscule, because they could make a mistake and they could put out $1 million worth of Facebook ads or whatever, max your credit card out that's on file on Facebook ads just overnight, just accidentally. So we've seen the bots change locations to the location that wasn't even right. So we had to catch that. We've seen them do things like that. But I think robots are going to be extremely good for the person that can deploy the robots. And I think eventually they're going to be doing almost everything. And then we're just going to, they're almost going to be like our slaves a little bit. But I don't know how many years that's going to be.
Yeah, I don't think it's, once again, I'm very bullish just because we're in it and we building our own AI within our systems and our clients. I think the key is obviously having a very good knowledge of your process flows, and then you actually have your developers working. And it's quite crazy because what's happening is a lot of lower level functions are being replaced by AI. So, like, we're a tech company, so we have developers. Now we don't need as many lower level developers as we used to have. We have really high end developers, and all the lower level developments done by AI, the lower level design, and you have far fewer really high level guys that know how to set the prompts and how to guide the lower level, AI development. And that's what's happening. And it's getting to the point where they're building clients, which is really what they would call the AI, the part of the AI that works is called a client. They're building clients that will now manage lower level clients. So that the hierarchy is, getting more and more and more infused with actual AI. And it's amazing. I think a lot of repetitive tasks that are very repetitive, very, very, require a lot of focus and are now already being replaced. And I was reading some articles with regards to surgery, even today, and it's becoming more and more prevalent. A surgeon has to be on their feet for a long time, many hours in an extensive surgery. They got to have absolute focus and concentration. That's what a machine can do. So a lot of surgery is now being replaced by robots, and they say it's going to be more and more and more. Now, obviously, there's a surgeon in the room, and they're there, but I think because it requires the robot doesn't get tired. It keeps very focused. It's so it's prevalent, and it's going to become more and more and more prevalent. It's just really, but I agree with Dustin. There's certain aspects where humans are going to be involved, but it's just going to become more and more part of our lives. I mean, I was actually at a mastermind in Miami, a guy that's developed AI bots to sell insurance, and he was a pretty famous sales guy, and he had developed a phenomenal sales technique, and he's taught his bots to do his sales technique. And the level of inflection, we're selling health insurance, which, is pretty complicated, with, how many people in your family and what deductible, and your doctors and your networks. And I mean, he went through an example with us, and it was unbelievable how amazing this bot was. Her voice, the inflection in her voice, there was no latency, that delay normally on the lower level, and she went through the sales process, which was a really proven sales process that had been taught to this bot, And it was amazing. And right up front, she says, hey, I'm a bot. If you prefer to talk to a live person, I'll be happy to transfer you. My feelings won't be hurt, but I'll give it a shot. Let me see how I can help you. And oh my God, it was frightening, the amazing job this bot did. So yeah, it's pretty interesting.
I like to mess with the bots. I like to just lead them down this rabbit trail. If it's a human, I'm actually more cordial to them because I know they're human. As soon as I know it's a bot, then I'm like, all right, it's on.
Well, you're not going to hurt their feelings, that I can assure you.
Yeah. So, okay. So here's the thing. We use lots of bots for renting properties. No problem. And people actually prefer it because it's immediate and we can get all their stuff. And then once it goes to the leasing process, then a human gets involved. But we found it's better when there's one bot and one human than when there's multiple humans or only a bot. There has to be some sort of human interaction, but almost all the majority of the immediate conversation can be handled by the bot. When we're raising capital, no one wants anything to do with the bot. They take it.
Absolutely. It's a different, yeah.
So yeah, lots of different. I think it just depends on how far up the level goes, and maybe in the future you can raise capital with a bot. It just doesn't seem it seems highly unlikely. The other thing is when I try to see, I think it's a bot when the speech is too perfect. There's no pauses, there's no ums, there's no ands, and they'll put a like in there, only not enough. They won't have enough likes. They'll just to have a little bit of misspeech, throw a like in. It's almost too perfect. That's how I kind of can tell it's a bot.
Yeah. I mean, this woman, this bot it was phenomenal. It was very natural. There was inflection in the voice, with the right pauses. It was, I mean, it was really, really impossible.
Perfect though? Was it perfect speech?
It was very close to perfect. It was amazing. It really was. I mean, it was wow.
Does that throw you off then when it's too perfect of speaking?
Well, I think it was very natural. So the way we talking now, where there's a pause and you sort of think for a minute and there's let me. It had all these aspects to the speech. It was phenomenal. It really was amazing.
Hey, if you guys are on Instagram and you like messing with AI, there's a guy you should follow, Husk, HUSK.IRL, like in real life. He gets on ChatGPT and just messes with it. He's got so many. It's super entertaining. He's really figured out all the little gotchas where it just fails. So,
yeah.
Well, hey guys, this was great. We covered the news portion of the show. Let's kind of wind things down here. I'd like to thank our sponsors: United States Real Estate Investor Advertising, Real Expert Talks, and Universe Media Publishing. And of course, thanks to our guests here, Dustin Hendrickson and Mitch Ginsburg. Why don't you guys let people know how they can connect with you? We'll start with Dustin.
Mailboxmoneyre.com. RE is in real estate. But yeah, that's our website. You can find all our links, everything. I'm also very active on LinkedIn, and it's Dustin with an E, Dusten, Hendrickson at LinkedIn. And yeah, we post all kinds of stuff on LinkedIn about business, personal life, education, entertainment. We try to make it kind of a fun content follow.
Great.
Yeah, so I'm mginsburg@comloan.com. That's my email, COMMLOAN.com. Our website is just comloan.com. So we're a commercial lending marketplace. Unfortunately, we don't do residential. But anything that falls within commercial, which is more than 4 units on multifamily, and then pretty much everything else that doesn't fall into residential, I guess we do. We're, as I said, we're a marketplace. We're that operating system for commercial real estate, mortgage brokers. So we're, if you have a commercial mortgage need, one of our guys will be delighted to help you.
Fantastic. Thanks again, guys. I'm your host, James Brown. Feel free to connect with me, especially about partnering. If you're an investor-focused agent, go to jamesbrownrealestate.com/connect. And don't forget, if you're an investor looking to connect with an investor-focused agent in your market, email me at james@jamesbrownrealestate.com. Also, huge thanks to our founder and producer, Antonio Holman with United States Real Estate Investor. Follow and subscribe to This Month in Real Estate Investing at thismonthinrealestateinvesting.com or your favorite podcast app. We're on all the podcast apps. And if you run across any interesting news, events, or have suggestions for expert guests like we had today, feel free to share by emailing Antonio at UnitedStatesRealEstateInvestor.com. And remember, when one door closes, another door opens to financial freedom. See you next month.